For JB Hunt. Let's talk some trading this morning. Let's go down to the SIBO. Alan Nuckman is not looking at trucks, but maybe some of the stuff they carry, some basic goods and staples. You're looking at Kellogg, Alan.
Yeah, I'm trying to slow my roll a little bit. So we've seen a big run up in tech, and I know we've talked about a lot of things. We've talked about AMD, we've talked about Qualcomm, Micron. Slow. I'm a little stepping back a little bit here after the big run that we've seen in this market, obviously. I think you want to find some value, maybe some stocks that haven't participated. And Kellogg is a great example of, I wouldn't call it a Dow dog, but pretty much in that same genre of a slow mover, but offers long-term opportunity.
So, Alan, we're going to talk the Kellogg trade, but I got to say, it sounded like you're a little cautious up here. You were very bullish on our way here. So is this it? And did we get the run-up you were telling us was coming?
No. I'm still very bullish, but you want to use these surges. You want to sell into strength, and that's what we've been doing here over the last couple weeks. The strategy that we use, where we're buying in-the-money calls, have given us multiple opportunities where we've been able to take 50% profits and even 100% profits on our plays, because these small moves in the underlying stock can be big payoffs in the right options, and that's what's worked for us so far. So you want to buy the dips and you want to sell the rips. So I want to maybe go into some money flow into some other areas that haven't had so much momentum.
Yeah. All right. And to your point, Kellogg has not, right? But it also hasn't been dropping past the 52 level that it kind of bounced off, 52, 53 a few times. So walk us through this.
All right, very simple. Technical trade here. It's a stock that traded between 50 and 60 for, I think, 4 to 6 months. So now it's at the 55 point, the midpoint of that trading range. A push above this should send it to the top of the range, and then a breakout sends it that $10 distance from that high to low, target 70. So there's a lot of upside potential here. If you can think long term, I don't know what the catalyst is going to be. That's not my job. I'm a technical guy looking for a breakout, some follow through, and it's really just an odds play. So the $50 call for January has more than 6 months of time. 50 hasn't been seen since 2012, so you have the right to be long at a major discount from where we're trading. This option is going to cost about $675, and it's $500 and some in the money. So it's a chip that we can look to see if this sector and this beaten down, downtrodden stock can make a bit of a turn.
You're a technical guy, Alan. Do you feel safe with the fact the company's bounced multiple times around that level I mentioned, 53 bucks, that maybe the downside just on the chart is limited?
Exactly, and there's one technical indicator that I follow. I look for the implied volatility, and when we made those lows, we did not see new highs in implied volatility. That's often a sign that the sellers are exhausted and the market can bounce back. You were just talking about L Brands. That happened in that stock where it made new lows, and then there was a short squeeze, shook everybody up when it couldn't get any more downside push. That's the kind of thing I'm looking for to happen in this stock. And obviously, we're coming into July here. We're going to get a rate cut, and there's more and more odds that it's going to be a 0.5%. So now there's almost a 30% chance when they had really taken that out of the equation. So let's see what kind of presidential pressure can be put on the markets, and that could cause us another big market melt-up if we get a 0.5%.
All right, Alan, nice take here. Weaving back and forth between the trade and a little macro commentary. Good stuff as always. Alan is the Chief Market Strategist at Agora Financial, joining us from the SIBO. We'll be right back. More talk on volatility.